What's going on, guys? My name is Arjun and welcome back to my channel. Today, I'm going to continue giving you guys recommendations to help you build your beginner portfolio. Please remember that this is not financial advice and this is just my opinion and my recommendation, and that you should do your own research and look at whether or not each recommendation can fit into your portfolio and work for your investment objectives. Before we get into today's stock, I want to go over quickly what are the criteria we're looking for in these companies and what you should do with these. The first thing is we're looking for companies that will outperform over the next 5 to 10 years. So our investment time horizon is a long-term time horizon. The company should have the following criteria: strong overall growth, profitability or path to profitability soon. They should be in an industry that's evolving and growing and not in a dying industry. They should have a moat in their industry. And basically, you should be able to answer the question, are they a game-changing company? And finally, they should have strong leadership. Strong leadership is what's going to allow the company to continue to grow into the future. A good leader will set out a vision for the future and execute on that vision. So now let's talk about what you should do with these recommendations. You should look to add to these positions consistently over time. I believe that these are good companies and good stocks that will be useful for you to build a core part of your portfolio with. Being a core part of your portfolio means that you're going to keep adding money to this and really leave these companies to grow. Periodically, you should be willing to take some profits out so that way you have more money to invest when stocks come on sale. Finally, please have patience with these investments. Patience in two ways. First, have patience in getting a return on these investments. These companies are going to do well over the long term. So these are not going to be investments that are going to return 100% in a week for you. The second way to have patience with these investments is when you're buying and building your positions. Don't invest all your money into these companies at once. Buy a little bit at a time and buy consistently. When these stocks come down, be ready to buy more. Today's recommendation is IDEXX Laboratories. There are a lot of industries that are very cyclical, but one industry that continues to grow and we continue to put our money into is taking care of our furry friends. IDEXX Industries is the leading manufacturer of diagnostic tests, equipment, and services for veterinarians, livestock, poultry, and dairy markets. They use a razor and blade model. So basically for IDEXX, what that means is that they have a consistent recurring revenue. So first, IDEXX makes some revenue by selling machines that the vets can run tests on. Then, they continue to make money off of those machines by selling the consumable tests that the vets have to keep ordering. They're leading the way in the humanization of animals. So in the same way that we are running diagnostic tests on humans and looking to establish preventative care, IDEXX Laboratories is looking to do the same thing for our furry friends. So now, let's talk about their profitability and growth. IDEXX Laboratories had $2.7 billion in revenue, which was an increase of 12%, despite many of the veterinary clinics being closed during the first half of the year due to COVID. Their growth was driven by strong growth in their companion animal diagnostics. That group had 17% growth, and that represented 88% of their total revenue. So these are tests that are run on cats, dogs, and the smaller animals that we keep as pets at home. One important factor that we always like to look at is how strong was their free cash flow. IDEXX Laboratories generated $541 million in free cash flow, which was a growth of 77% from the previous year, despite having to deal with added costs due to COVID. They were also very profitable and have been profitable for many years. They grew their profitability 37%. That being said, they feel that they're only scratching the surface of the massive market opportunity ahead of them. The company sees a potential $33 billion market, and they're only serving about 12% of that market. IDEXX demonstrated high resiliency throughout the COVID-19 pandemic. As you can see from this chart, IDEXX's recurring revenue from their diagnostics only fell about 20% at the peak of the pandemic, and then they quickly rebounded to actually growing 30% year over year once June came around. One of the main reasons and one of the main areas for growth is that people are willing to make trade-offs in other areas of their lives to take better care of their pets. Pet owners said that if their household income declined, they would reduce other expenses like eating out, personal grooming, video streaming services, and live entertainment in order to cover their pet expenses. So now let's talk about the moat that Idexx Laboratories has built. They lead the veterinary diagnostic market both in innovation and overall trust. Back in 2014, Idexx estimated that their R&D budget accounted for 80% of all global R&D on companion animal diagnostics. That means that Idexx was investing for the future. They were willing to spend more than everybody else, and that has given them a huge advantage when it comes to being able to innovate and build trust in the market. In fact, because of this, they were able to build a COVID-19 test for pets by April of 2020, just 1 month after the pandemic had caused massive global shutdowns. So now let's take a look at the leadership of Idexx. Jay Mazelsky is their CEO. He's a former Philips Healthcare and Agilent executive, and he's been with Idexx for over 8 years. And in just about 2 years, the stock price has jumped 2x. Jay Mazelsky knows that the company has invested for the future and needs to continue leading the way in innovation, and that's exactly what he's doing. So now the most important thing and what you care about is how well has the stock performed. So if you take a look at the last 5 years, Idexx stock has gone from 65 to 480. Currently, it's about 16% off of its all-time high, and Idexx was taken down during this recent sell-off. But still, the 1-year return is close to 106%. And as with any other investment, there are some risks associated. First, there is competition. Zoetis is a spin-off from Pfizer, and they are solidly in the number 2 spot in this industry. So there's always a risk that they could come out with something more innovative and push Idexx out of the market. Another risk associated with Idexx is that animal hospitals could decide to look at other options. So for example, the Mars company has been acquiring animal hospitals all around the country, and they now run the largest animal hospital in the world. They could choose to go with somebody other than Idexx. So now let's quickly go over Idexx again and make sure it checks all of our boxes. First, strong overall growth. They had 12% growth despite the effects of the pandemic, where for half of the year, many people were sheltered at home and they did not want to go out to veterinary clinics for non-emergencies. The second box, profitability or a path to profitability soon. This company has been profitable for many years and they've been growing that profitability. They had 37% profitability growth last year and 541 million in free cash flow, which is a growth of 77%. The third criteria, they're in an industry that is evolving and growing. People will always be willing to spend for their furry friends. And as more people adopt preventative medicine and preventative care for their pets, Idexx will be a beneficiary. The fourth criteria, do they have a moat in their industry? Are they a game-changing company? They have a market-leading diagnostics machine and recognition. They've spent a significant amount on R&D, and it's not as though somebody can come out tomorrow and beat them without having to spend a lot of money. And finally, do they have strong leadership? Somebody who's going to lead them into the future. Although the CEO has only recently taken over, he's already doubled the stock price in just about 2 years. He comes with an abundance of experience, and he knows that it's important to invest for the future. So just again, I want to reiterate, this is my recommendation and my opinion, but I feel that Idexx industry is poised to grow tremendously in the future and will be a great part of your core positions in your portfolio for the future. For this series, my goal is to give you guys some recommendations of companies that I feel will perform tremendously well over the long term and outperform the market. Hopefully you guys are able to find a few companies that you like and you can start building your portfolio with them as the cornerstone. Thank you guys for watching this video, and if you enjoyed it and want to learn more about business and investing, comment, like, and subscribe to my channel, and let's head on over to the next video.